Growth stocks and high multiple stocks have crashed in the past couple of months, some of them dropping 50 and 60% without any fundamental changes in the business. And today we're going to be looking at the two top growth stocks that have some big catalysts ahead of them that have dipped. These stocks are NIO and Lemonade. If you enjoy the video, remember to like and subscribe, and remember nothing said in this video is financial advice and you should always do your own research. A lot of you may be a little bit confused. The S&P 500 has not really dropped at all. For the past 6 months, it's just been going up and it's sitting around all-time highs. It's currently at 4,173, which is huge. So why then have the top growth stocks dropped? We can see if you're holding things like NIO, Palantir, Lemonade, these stocks have all dropped 50-60% in the past couple of months, and there is a distinct reason that these stocks have dropped while the massive mega cap stocks like Apple and Amazon have kept going up, pushing the S&P 500 to all-time highs. And this is because of the hedge funds. A lot of the hedge funds are still buying Apple, Amazon, and they're pushing up the market, so it's going well. However, Vanguard, BlackRock, and the other hedge funds have realized that they can scare retail investors in stocks with a smaller market cap. Something like Lemonade only has a market capitalization of $5 billion, or Tattooed Chef with a market cap of just over $1 billion. And hedge funds have realized all they need to do is start shorting these stocks, pushing it down, and spreading fear about these stocks. And as a result, they have dropped significantly and they continue to drop. As such, I think there is some really good buying opportunities. These companies cannot push these stocks to zero. They have some real value and they will go well into the future. With that said, let's get into the first stock, which presents a major buying opportunity, and that is Lemonade. If you do not know what Lemonade is, briefly, Lemonade is basically just an insurance company, but it is quite disruptive in that it's different to other insurance companies in the way it pays out, and it's a lot more user-friendly for millennials. However, Lemonade has just announced a new $300 billion growth opportunity. Lemonade have basically announced they are expanding their business into auto insurance. This is one of the biggest insurance sectors that they have not gotten into, and they didn't have really any plans to get into it whatsoever. So as a big surprise to see them getting into auto insurance, which is a huge industry, is very good. This means the people on the Lemonade side don't need to go to two different sites for their insurance. Instead, they can have all of their insurance needs on Lemonade alone. This means more people will use Lemonade and people will pay more when they're using Lemonade, which is amazing for the business. So I'm very bullish on this news. As you can see, Lemonade have announced that this is one of their decisions because of the massive total addressable market in the United States alone, and because they've just passed the 1 million customer milestone, and they really believe this is a good move for the company. So if we look at Lemonade's share price, it was all the way up at around $180 a share, and since then has dropped to around $89 a share. $180 a share was a bit overvalued for this company, and I don't really know why people were paying for it then, but the hedge funds have really pushed this stock down and down with the tech sell-off. I first bought Lemonade at $78 a share, so I'm pretty happy right now with where it's gone, all the way up to $90. However, I still think $90 is a pretty good deal for this stock, and I do believe this catalyst has the potential to push Lemonade higher and higher, so I'm very bullish on this stock because of this catalyst, making it my number one growth stock right now. My number two growth stock right now with some huge catalysts is NIO, and if you've followed the channel a little bit, you'll know that I love NIO. NIO has done a ton of things recently. NIO has dropped substantially. However, because of this, we've seen a massive inflow of options into NIO right now. It's getting record high options because people feel it's so safe that NIO will get up from here. They're going to do options. Personally, I don't actually do options. However, this is an interesting metric. NIO are also going to be reporting first quarter 2021 financial results on April the 29th. Generally, we see a pre-results run-up and a post-results sell-off. I expect this time to be no different. However, I do see it running up a bit pre-results and only selling off a little bit if all goes to plan. If NIO can deliver over 7,000 vehicles, despite the semiconductor shortage, I will be very happy. And that's in the space of just 1 month. So in the month of April, if they can hit those deliveries, and if their numbers are consistently pretty good, I think NIO will go very well. However, if they disappoint on any metrics, maybe not so much. I do, however, see a pre-results run-up for NIO on the cards. NIO have also announced a whole bunch of things doing their power swap stations. They have just swapped 500,000 batteries, which is a huge amount, and over the next few years, NIO are partnering with Sinopec, one of China's biggest companies, to deploy 5,000 battery charging and swapping stations. This basically means NIO will have swapping stations all over the country. As such, many users will want to buy NIOs, and they have a massive infrastructure lead over the next biggest car company, so I do see this as a pretty big catalyst for NIO. As we can see, NIO stock has dropped from all-time highs of $67 a share right down to $38 a share. I do believe 38 is undervalued for this company, and this is because they grow at over 300% year over year. Sure, if they weren't growing, it wouldn't be undervalued, but with NIO's growth rate and with their big advantage within China, which is the biggest EV market in the entire world, and China are mandating a certain amount of EVs must be produced, I do see NIO doing really, really, really well going into the future, and I think this is a big catalyst. The hedge funds can't short this stock down anymore, and I do think that 38, 39, 35 maybe is about the base for this stock and the lowest that you are going to see for this stock. If you enjoyed the video, remember to like and subscribe, and remember to comment down your favorite growth stocks in the comment section. NIO and Lemonade are my two favorite growth stocks right now at these prices. They have been sold off with the tech sell-off, and they have a few major catalysts going for them going into the future. Thanks for watching.